The new year is time of renewal, and for many businesses, a time to reevaluate and create goals for next year. This 2020 is very special. In this session, I'll go over year-end preparation for most businesses so that you will be able to jump into New Year strong and with a realistic objectives. I will go through a series of things that before December 31st, you must do. Okay. So the number one is inventory count. Please make a note. In 2020, and when you count inventory, you need to write off all the inventory that you could not sell. So we bought something and we want to resell. By the time the stuff came in and the trend of selling it is already gone. For example, one of my clients, and last year during Christmas time, they ordered a lot of new Christmas items, but for whatever reason, there's delay in shipping. So a lot of those timely items actually came in January and February. So they kept it all the way to now, wanting to sell it. Pandemic is so deep and heavy here, and there is nobody really buying it. So you end up with inventory you cannot sell. But what you can do is to write it off. And when I say write it off, means what? Means you are going to completely, on your accounting book, you're going to zero out the inventory that you cannot sell and is outdated and put them in cost of goods sold. The more inventory you see on your shelf, the more taxes you pay. So I want you to go to your shelf and look at your inventory, decide, are they outdated? If the answer is yes, write them off to cost of goods sold. So they're done. They're zero. They're worth nothing. I don't care how much you bought for it. So you write them off. So inventory counting at the end of 2020 is so important. I want you to write off anything, everything you know need to be written off. Don't feel sorry about it. And write off doesn't mean you throw it in the trash can. Don't rent a dumpster and ready to dump everything because you might still sell them. But when you sell them later, you have no more cost attached to it. So let's say if you have a bag of rice, it's outdated. So you are going to throw it away. You are not going to throw it away because you feel like, well, someone would get a discount. Buy my bag of rice. The bag of rice, let's say, is $10 you bought it. You are going to sell it for $20, right? So what you do is that you will write off the $10 you bought this bag of rice into cost of goods sold. I know you didn't sell it, so we write them off. But on the shelf, you still have this $10 bag of rice. If you have a customer came in and said that I want to buy your outdated inventory like rice, tell the customer that I can sell you for $10. So you recover that $10. That $10 is 100% gross profit because you already wrote that off, right? So inventory write down doesn't mean you throw them in the dumpster. Inventory write down means later on if you sell them, that is 100% gross profit. That's okay. And we can make money in the future, but I am talking about 2020. And the reason why I want you to write inventory off like that is because 2020 is special. 2020 is a COVID year, and we had CARES Act. CARES Act said if 2020 you have a big loss, say inventory you got $1 million, and you wrote them all off. So you only had a $200,000 sales. You write off $1 million inventory. You got $800,000 loss. Am I right? Because you sold for $200,000, you have $800,000 inventory write down, which is cost of goods sold. You have that $1 million cost of goods sold because the inventory is $1 million. So you put $1 million there. You have $200,000 sales. So you ended up with $800,000 loss. Okay. CARES Act and becoming law on March 27th said that $800,000 loss you have, and you can go back 5 years to look for the profit you paid taxes for. So you may have an $800,000 profit in 2018. You paid a lot of tax for it. And then now you can go back, offset 2018, get your taxes back. Do you know how fast you can get it back? IRS promised that to be in 90 days. 90 days, 3 months. Okay? So that is why inventory counting is so important. It has much deeper tax implementation this year than ever. And so in the past, we say inventory count, you want to be accurate. And if you are a business owner, just don't want to write it off, like to keep it in the inventory, nothing wrong with that. You don't have to write them off. But with this particular situation right now, writing off inventory is not against the law. Writing off inventory is a business judgment. With that, and you know what to do as a business owner. So make sure you work on inventory. So important. And if you don't know how to do it, you have a tons of questions, and we do provide business consultation service, and our staff can provide you tools to do that. And we can help you have that. Okay. Next one, donation has much greater purpose than ever, as this can help to utilize CARES Act benefit. So donations, okay? This year with CARES Act, it has two things that I want you to know. If your corporation made money this year, let's say you made net profit of $100,000, and you can write off $25,000, 25% of your net profit, your taxable income, okay? 25% of your taxable income can come out of your company, and it goes to a nonprofit organization of your choice. Well, you can come to Immigrant Entrepreneur Summit. That is a nonprofit community CPA put dollars to. You can choose one. You can do that one. And you also can form your own nonprofit. If you have a passion, there's no nonprofit out there can fulfill that for you. Why don't you do something? And you ask me, how long does that take to start one? If you call us on Monday saying you want to get a nonprofit established, we'll get that in before December 31st. Then you can donate right away for 2020. That's how fast you can do it. Okay, so company donation. What about personal donation? 2020 CARES Act said you can donate 100% of your income and to write that off. So what does that mean? Let's say if I make salary of $20,000 a year, and my tax return has 20,000 AGI, I decided to donate all of my AGI to Immigrant Entrepreneur Summit. And you can do that. It allows no more ceilings. And in the past, you can't donate all your income. Now you can. And so you will put that 20,000 into your Schedule A and do itemized deduction and wipe out all your income. And the taxes you paid on your W-2 come back as a refund. So on the personal donation side, you can do 100% your income donation. And you also have a $300 extra donation that you can put before Schedule A to lower your tax rate. So, and let me tell you what kind of people on my client list actually is doing that. We have a lady and who just sold her businesses in 2020. Actually, she planned to sell it even before the pandemic happened. So it was always in the plan, negotiation already in place. So pandemic didn't really change her mind. So she went ahead and sold it. And now she has a lot of income on her personal tax return as a result of selling the business. But she sold her business because she wants to do something more purposeful. So she formed a nonprofit, donate everything into the nonprofit. So now, does she have taxes to pay? No, because it's all went to nonprofit. So her personal taxes is zero. Nonprofit received the donation. Nonprofit is tax exempt, so no taxes. All right. So donation before December 31st, 2020, you have to do that. The reason I say that is our personal taxes are cash based. So that means if money didn't come out of your personal bank account, it doesn't count as donation. It has to be donated, done. So cannot be like you wrote a check but you're just thinking and didn't give out, you can't count that. So that's why it needs to be done before December 31st, 2020. But what about company? Company is a little different because you could have company accounting on accrued basis. That just means that you could be paying and you could be writing a check on December 31st to donate $200,000, but that check is on accrued base, so it's become your expense, but it's payable to the nonprofit maybe on January the 3rd, right? So that's different. But on the personal side, it's always cash. It's always cash based. Okay. Next, before December 31st, 2020, the business owner need to think about renovations, property purchases. Okay. And reconsider if you didn't do renovation in 2020 because you are so stressed out with pandemic, you're supposed to do it, but you didn't do it. Then look at your 2019. Did you do that in 2019? And if you did that, there is something you can do in 2020 to correct what wasn't due right in 2019. And if you did that in 2018, you can consider cost segregation for the property to bring the depreciation adjustment into 2020 or even go back to 2019. So before December 31st, 2020, and we want you to think about how you can reduce your profit to the lowest. So you want to make sure if you renovated any properties in 2020, every dollar you spent, it will be expense. So let's say you renovated 450,000 and you actually 2020 you are not doing that great. So you actually had maybe $10,000 profit. That 450,000 will drive you to have a $440,000 loss. Am I right? Because if I write off all my renovation, which I don't, because someone told me that it is 37.5 years depreciation, but now Ying said it's 100%. Okay, if I do that way, and I'm going to have $440,000 losses. You absolutely right. You do. And what happened to the loss? Remember earlier I told you that you can go back 5 years to look to see whether in one of those business years you actually paid taxes. If you did, you offset that gain and you get the tax dollar back. That's what CARES Act says. Why are you not taking advantage of? And if you are going to expand your business anyway, why are you not looking for property to purchase even before December 31st? If you see one that is right on, is what you like, buy it. Because when you bought it, even though you say, well, Ying, I did buy the property, but I didn't pay anything. I 100% finance it. So what? And that is still deductible. And so your building, let's say you spend $500,000 to buy the building, and the building structure depreciate 37.5. There's other things depreciate 7 years, 5 years. So you will get $200,000 on depreciation. So if you made a $10,000 profit, you have the $200,000 depreciation. So what's your loss? $190,000. If you made a profit in 2015, $190,000 profit, and you paid $45,000 taxes, that is what going to come back to you. Congratulations. You just got $45,000 refund out of nowhere, out of the past, out of the places you would never get it back if it is not pandemic, if it is not CARES Act. After this webinar, I need you to run to get things done because that's how we can do a good business. Next, before December 31st, 2020, there are people are not doing well, okay? So run out of funding, PP is gone, EIDL loan is gone, and just really, really want to reconsider life. So they want to sell, they want to close, okay? And you close the business, you sell the business at loss. Do you know that that's a gold mine? And don't walk away without making an announcement with community CPA. We need to capture the loss for you, and we will go back 5 years to get those taxes back for you. There is nothing called loss in business. In business, there's only gain and the losses with certain time frame. But overall, you should make it. Overall, you should make money because of all these changes and all of these tax rules, all of these benefits that you're supposed to get. Chris, I want to tell you that we provide consultation service. All of these things I'm talking to you, we can provide that service to you. And don't look elsewhere, look at Community CPA. And we are the firm, we want to grow. Our ambition is big because your ambition is big. I am so excited if you are like me and your life is going up, your business is upticking, and you just got held back a little bit by pandemic fear, but that is going away. 2021 is a recovering year. But 2021, folks, I want you to know you're supposed to get your sales, regular sales, plus 50% of 2020. All right, conclusion. I appreciate you being here and go into YouTube, like us, subscribe, and tell your friend that Community CPA does such a great webinar out there. Let them listen to us. You know what? The more people who are following us, the more energy we're going to gather. And you know, in business, is a long game. You're the business owner. You don't get a lot of people to talk about your business, okay? But you can talk about your business with us because we live your life. We were in your shoes, or we are in your shoes, or we will be in your shoes. So we will be there to support you, okay? And I will talk to you really soon. And it's so good to see you. Bye-bye.